Last week, there were encouraging signs that inflation is beginning to moderate on the headline figure, but sticky core inflation continues to be a pest for the Federal Reserve. The interest rate pause bandwagon was also continued by the Bank of Canada, which decided to keep rates at that 4.5% level. So overall, it was a busy week of action on the fundamentals side, and it's really set up some great technical setups for this week. Hello, I'm Connor Woods, market analyst at ForexSignals and howtotrade.com. Here is our weekly preview for the 17th to the 21st of April 2023. Now, it feels like a very important time for the markets right now. There is a sense of calm from the initial banking shock that we had, which feels like it was ages ago, and inflation is moderating, albeit still way too high. Can there really be a soft landing? Our research sees this as only really a 10% probability, and with the markets just showing signs of stress last week from yearly highs, is it now sink or swim? Well, Monday's Empire State Manufacturing Index, Thursday's unemployment claims, and Friday's PMIs will go a fair way in determining the current health of the US economy. There is likely to be plenty of attention too in the UK markets, with the Claimant Count Change on Tuesday and just that small matter of CPI data on Wednesday. With inflation still in double digits in the UK, by the way. That's not the only CPI data due out. Canada will release its report on Tuesday, followed by New Zealand on Wednesday. Let's dive in to the best opportunities this week, day by day. So then Monday will be the day when traders find clues about just how bad the manufacturing sector is faring in the US, as the Empire State Manufacturing Index is in focus. Last time out, the figure caused quite a shock in the markets by coming in at minus 24.6, which was not only significantly worse than forecasted, but showing a clear contraction as well. And in recent times, I've noticed that the stock market hasn't actually taken too kindly to the worsened economic data. So it's going to be interesting to see how this NASDAQ chart reacts from here. So this is the daily time frame. And first of all, you can really see, that clear moving average crossover, that retest of the 200-day moving average and that run higher. This is clearly the Goldilocks scenario. This is clearly the market thinking that inflation is going to come down and there's going to be no real consequences of the lagged effects of monetary policy. I just don't believe it in the research that I've done. I just don't believe it. Now, here's the next swing high from a daily perspective that we've had from Friday the 3rd of February up till last week's high of the week as it stands. But at that time, when we've had that new high in the market, just look what's happened to that RSI indicator. This is a move which is losing momentum. Okay, so yes, we are seeing newer highs on the NASDAQ from a daily chart perspective, but just look what's happening here on that RSI. We're losing momentum here. This is potentially a sign that things just around the corner, it might take a week, it might not be this week, it might be the week after that, but things potentially are starting to shift. And I'm really looking at, if we zoom in here, really 13,370, 380 as being a decent level of resistance after filling some of this candle imbalance we've got. So yes, we may continue on the front foot, but I wouldn't be surprised if softer economic data causes more of a sell-off in this NASDAQ chart. Could have quite a busy Asian session on Tuesday, with China releasing its GDP figures, the primary tool for measuring economic growth. Now, experts are actually predicting that China's Q1 GDP is set to grow around 4%, as the major economic indicators have continued to show green shoots since the start of the year. But the CHN 50 still trades below the 200-day moving average, as really that the China recovery story hasn't taken off as much as some had hoped. And really you can see that clear difference from when we just looked at the NASDAQ, for example, when we're looking at the CHN 50, which is actually printing lower lows and potentially lower highs as well. Now, what's significant here is we've got right in this level that we've been trading in for really the past couple of weeks, is right where this 200-day moving average is starting to tick down. It's right where we've got that first evidence of moving average crossover, a bearish moving average crossover. We're now looking for this 50 to potentially come and cross over the 200. And we've also got our parabolic SAR, which is telling us that this is a market now in a downtrend from a daily chart perspective. Clear channel we was in as well here, again, and that's been broken out of as well. So I think it's going to take quite a bit. It's going to take probably quite a surprise to the upside in the GDP figures in order to get enough buying power to break us through this resistance. And if not, it could just be a continual grind to the downside. Now, Wednesday is all about the UK, as it will look to avoid the unwanted headlines about double-digit inflation, which is really forcing the Bank of England's hand right now. There's quite simply been no respite in the UK inflation crisis, and traders will be surely wondering what it's going to take to get inflation below that 10% level. Now, the pound has been gaining ground in recent times thanks to a more stable outlook, and I think this really could go either way. Less so against the Swiss franc, which, as you can see, really has been stuck in a general daily range for a while now, and we're approaching potentially discount levels here, and we've just got from a 4-hourly perspective, when we look at the lower lows that have been printed, clear bearish trend here, but just looking at signs of a reversal here on that RSI indicator. The RSI ticking higher ever so slightly, but those lower lows potentially starting to form. Now I'm wondering whether we can squeeze out any more weakness here in the sterling Swiss franc. As you can see, our parabolic SAR telling us we're in a downtrend, looking for that first changeover in the dots, but looking potentially at this level to be an area of support here for sterling Swiss. As you can see, that was the area really from the bottom of that range, which broke out to the structure highs. And if you actually look here, we've still actually got equal highs to target as well. So potentially a turnaround here. Would need probably a stronger inflation print. If inflation's showing weaker outlook on the day, we might see sterling Swissy come and trade further in and maybe come and test this 1.1 level. Now, the majority of the volatility on Thursday is likely to come in the US session, as there are existing home sales, the Philly Fed manufacturing index, and unemployment claims all to contend with. And it's going to be the unemployment claims that really drives the markets, as last time out, unemployment claims rose once again to over 230,000. Now, the forecast is for 233,000, and there's a clear sign of economic weakness potentially forming here. Can the dollar gain any ground in this situation? Well, it's continuing to be hammered really off of the back of weaker data here. So any surprise that we get to the upside here in the data, in terms of stronger than forecasted, I would expect quite a significant sell-off here in AED USD, which I personally think is shaping up to be a fantastic risk-reward trade here around that 100-day moving average potentially. You can just see how, from a daily time frame perspective, we've just flushed out these highs as well. There's our buy-side liquidity. It's potentially been flushed out into that 100-day moving average. There's that crossover. I think AED USD's still got legs to the downside, and now the dollar's created a new low, we should expect some sort of counter trend buying from a DXY perspective, which would put pressure on AED USD, at least to come and fill this imbalance here at 67269. At least to come and fill some of that. But you can see we got the breakout of that channel, but then we just snapped high off the back of lower data. So interesting times here. We could equally, get that springboard effect, continuing negative data in the US. That's also a possibility that we actually come and then trade well above this 100-day. And I think if we get a daily close above that, around this 68160, I think this opens up quite a lot of room to the top side. Now, as the trading week comes to a close, it's going to be the European PMI data that grabs the headlines on Friday. And early in the session, in the European session, the Manufacturing and Services Producers Price Index will be released from France, Germany, and the UK. And no matter where you look, the story paints the same picture. Services PMI seem to be holding up okay, but there's a real concern about the manufacturing PMIs. So I'm just going to have a look at Euro versus the Japanese yen here. Because really, what I noticed from a daily chart perspective is if this is looking like a clean breakout to the top side. And now, for the week ahead that we've got, I'm really looking at 148.347. If we're going to continue to get calm in the markets, then the yen's probably not going to perform, and we're probably likely to see some more upside. Yes, we've had 1, 2, 3, 4, 5, 6 consecutive days of upside here, so we're probably looking for some sort of pullback, maybe down towards the 145.5 level. But really, I'm looking for this week to be the week that this is the swing high from October that's going to be tested. Do we break above it? Do we wick into it and start to trade lower? We'll probably look at some RSI divergence around there if it's possible. Or if not, it could just be a continuation up towards that 150 level. Plenty to contend with in the markets this week, and it really does feel like we're moving into crunch time as the data shows signs of shifting to a more negative sentiment. Can the whole host of manufacturing data really show signs of improvement? Will the UK finally get an inflation print below 10%? Who knows? What I do know is that our team of analysts will help guide you through these opportunities every single day in the trading room, ensuring a high quality service as we cover all of the events for you in our live streams. We're also proudly producing streams covering the specific lessons in our new academy. So if you're looking to learn how to trade or want to know more about the markets, our academy is the perfect place for you to start. And you can access that in our trading room at www.howtotrade.com. Until then, trade well, and we'll see you on our next live stream.